Hi traders! In today's video, we're going to learn how to trade with pivot points the right way and discuss a simple and powerful central pivot range (CPR) strategy with real-life examples from the chart. Make sure to watch this video till the end if you want to take full advantage of the power behind the pivot points. Trading with pivot points is the ultimate support and resistance strategy. Apart from the different key information pivot points provide, trading Forex, stocks, or crypto with pivot points will take away the subjectivity involved with manually plotting support and resistance levels. As usual, we will go through the basics, then discuss how to trade using CPR with multiple examples from the chart. With that being said, let's get into it. Pivot points are one of the most elementary yet powerful indicators used in technical analysis. It is comprised of a pivot line surrounded by a series of support and resistance levels, which helps in speculating the price movements. There are several different flavors of pivot points used by price action traders, but the one that is drawing mass attention is Central Pivot Range, or CPR indicator. Central Pivot Range is a versatile technical indicator usually comprising three levels: a central pivot point, top central level, TC, and bottom central level, BC. To sum up, the fundamental idea behind this indicator is that the particular day's trading range captures everything about the market sentiment, and hence this range can be used to predict the price movement of the following days. But you might be wondering, how does CPR differ from traditional pivot points? If you're familiar with pivot point, you would know that it generally has one central pivot line surrounded by support and resistance levels. It's used to determine the overall trend of the market over different time frames. It is simply the average of the intraday high and low and the closing price from the previous trading day. On a subsequent day, trading above the pivot point is thought to indicate ongoing bullish sentiment, while trading below the pivot point indicates bearish momentum. The CPR is a leading indicator that helps traders identify key price levels and predict the trend momentum and direction based on past price action. By using the CPR indicator, traders get to decide the market before the opening whether it's going to be trending or consolidating. On top of that, the CPR is a great indicator to identify key price points to set up trades, especially for intraday trading. Let's look at a few examples from the chart. Before we discuss the strategy, if you're on TradingView, you can add the CPR indicator to your chart from the Indicators tab. Unfortunately, TradingView doesn't offer a built-in CPR indicator, which is the reason why we're going to use a third-party one. There are different options to choose from, and they're pretty much the same. I recommend using CM Pivot Points by Chris Moody. You can adjust the settings to make it aligned with our strategy. I usually add the daily one to my chart, but I will tell you in a bit why you should also use the weekly and monthly in order to come up with a high probability setup. Now, we need to add the CPR levels to our chart. Again, hit on Indicators and look for CD Pivot Range by Christian D. Once done, we will get the CPR central pivot point, the top and the bottom central levels, together with the two resistance and support zones. We can notice that the CPR range can be narrow or wide, depending on the distance between the top and the bottom lines. Always remember that CPR values act as the reference for tomorrow's trading. This is a leading indicator, so the CPR range we have added to our chart represents the key levels recorded the previous day. If the CPR is narrow and the three lines are very close to each other, this means that we are looking at a trending market, and the lines can easily be broken as the price won't tend to respect the key level. The price will mostly move in one direction, and you can enter the market when a reversal is formed. This is an example where the CPR is pretty narrow. The market was trending throughout the entire day, and the price broke the CPR levels multiple times. On the other hand, when the CPR is wide and the distance between TC and BC lines is relatively higher, it indicates a sideways market. The price in this situation will have more respect for the key levels. Therefore, you can rely on the CPR range as important support or resistance zones and use a sideways trading strategy. We found the CPR indicator to be highly accurate in the intraday time frame. It's recommended to use it in a 5 or 15 minutes chart for Forex, high beta stocks, or indices. Before we reveal the strategy, I just want to highlight the concept of virgin CPR. If the price levels for a particular time frame do not touch the CPR levels of the same time frame, then that range is known as virgin CPR. Based on statistics, there's up to a 40% chance that the price would not touch the virgin CPR for a given day, which is why it could be used as a very strong support and resistance level. This could be extremely useful if you're trading a pair that has a strong correlation with another one. For instance, if you're trading the US Swiss and the price of gold is approaching a virgin CPR level, you should expect either a consolidation or a price breakout on the Swissy chart. This will save you from entering an uncertain market or being stuck in consolidation for a few days, especially if you're going short on the Swissy, as it has a massive negative rollover rate. If you look at the big picture, you'll notice that whenever we have a sideways movement, the next day's CPR is narrow. This is exactly what we observe on the following day. Now, the second day itself was a trending day. Hence, the CPR for the third day was a wide-ranged one. Like everything else in technical analysis, CPR also is not a 100% win, but has a higher probability of success when traded properly. You can succeed with proper position sizing and risk management. With that out of the way, let me share with you the CPR trading strategy with some examples. When the CPR range is narrow, that means we are looking at a trending market. Look for buying opportunities when the current market price is higher than top central pivot, TC. Let me elaborate. Assume a Forex pair has rallied for a bit. The current market price is higher than the TC, and you're looking for an opportunity to set up a buy trade. You can now wait till the price arrests its rally and retraces back above the TC line. Avoid using pending orders, as it's important to look at the price action during the retracement. You want to see candles with short tails, as you don't want to enter the market during an uncertainty phase. Your stop loss should be below the CPR range, as the price will struggle to break through the key level. You can also add in a 200 simple moving average to the setup in order to strengthen your position. You can target the second resistance, but consider closing a part of your position when the price hits the first one, especially if you see some pin bars, as that shows a possibility for a trend reversal to occur. Regarding the short trades, the rules are pretty much the same. We should look for a Forex pair with a narrow CPR. The price is below the bottom central level. We go short after a bearish spike is formed. We can wait for a reversal to make sure that we sell at the highest price possible. The CPR range will act as a resistance level that could be used to protect our stop loss by placing it a few pips above it. We can target any of the support levels, but make sure to look at the fundamentals to estimate the volatility of the market. Before placing the trade, you can enable the weekly and monthly pivot levels from the indicator settings. Remember that when you see the daily support or resistance close to the weekly or monthly one, the zone would mostly be respected by the price, so make sure to use it as a protection for your stop loss and avoid having it in between your entry and take profit. Before I leave you with more practice examples from the chart, don't forget to subscribe to the channel and check out the other videos. Do you want me to backtest this strategy 100 times? Or build a trading indicator based on its rules? Let me know in the comments section. And don't forget the thumbs up as usual.